Happy Friday, everyone. As always, I stand between you and the weekend. It's a role I take very seriously, but we have a lot to talk about today, so I want to go ahead and get started so we can try to get through not just the homework, but also talk a little bit about the cost corporation discussion that we put off so that we can talk about the exam on Wednesday. So let's get started on the questions. So question 612 basically says auditor's primary consideration regarding internal controls is whether they what? So let's go ahead and reflect upon something I know you love, because I mean, who wouldn't love it? It's just amazing piece of art. Who says that auditors cannot develop just beautiful things? And everybody should be in awe of this, like right now. I think we can all agree that this is amazing. This masterpiece should go in the Louvre. All right. Maybe not. All right. Well, all right. Well, regardless of what you're thinking, what your opinion about the aesthetics of this particular item are, this is really important because this actually dictates how we depict internal controls for respect to an auditor. So let's go ahead and keeping this in mind. Let's go through the answers and see what our answers should be to this question. So primary consideration. So controls their primary considerations, they prevent management override. Is that a correct statement? Nope. Because remember, management override is one of the inherent limitations of internal controls that we cannot deal with. Relate to the control environment. So that's probably not a bad idea, but keep in mind that's not an auditor's primary consideration. That's more about the overall component as part of it as it relates to the COSO framework. Reflect management's philosophy and operating style. That's actually just basically the same answer as B. They both are related to the control environment, which we just established is not the auditor's primary consideration. Affect the financial statement assertions. All right, so going back to this beautiful diagram that nobody really appreciates as much as they probably should, is that reflected in this particular diagram here? That the controls relate to the assertions. Yes, that is what we're talking about. Because remember, the way that we categorize risk in auditing is using the management assertion. And so the controls should cover the assertion that management represents relevant to that risk. So that's really, really important to note. This control sequence will come up time and time again, and that's one of the important relationships we have to identify. Of course, the other important relationship is that our test of control is relevant to the control that we've been implemented. And I suppose also that we properly identified the risk and assertion. There's quite a bit to go into there, but one of the most important things that we can talk about with respect to this chapter. All right, question 613. Which of the following statements about internal control is correct? Not my favorite type of question, but we can walk through this. Let's go ahead and go through the answers. A properly maintained internal control system reasonably ensures that collusion among employees cannot occur. Is that a correct statement? That is not a correct statement. Again, we talked about inherent limitations of controls. Management override was one of those. The second one was errors and mistakes, and collusion was the third. Collusion cannot be prevented by a system of internal controls. It's just inherent limitation of the nature of controls. Establish and maintenance internal control is an important responsibility of the internal auditor. Is that a correct statement? No, who's responsible for the establishment and maintenance of internal controls? Management is. Exceptionally strong internal control system is enough for the auditor to eliminate substantive procedures on a significant account balance. Well, as much as we might like to say that it's the case, keep in mind that when we talk about substantive procedures, ultimately we're trying to determine if the financial statement balances and the account balances and the financial statements are correct. If we look at controls, even if the controls are immaculate, perfect controls, those only evaluate the transactions and events themselves because they're separate responsibility areas. So we cannot eliminate substantive procedures altogether. We can reduce them to a minimal level, but we can't get rid of them. So we've only got one option left. Let's go ahead and check this one out. Cost benefit relationship is a primary criterion that should be considered in designing an internal control system. What do you guys think about that? So that's one of the cost of the fundamental characteristics of accounting information is the cost of that providing that account information can't exceed the benefit. Would that be true for controls? If I create this incredible control, design this incredible control that cost me $1 million and my savings on that are $10 a year, would the management be in favor of that control? Probably not. We want to make sure that the benefit of the control exceeds the cost. So D is our answer. 615. Monitoring is a major component of the COSO internal control integrated framework. Which of the following is not correct and how the company can implement the monitoring component? All right, so I may have to do some research in this, but there's actually one answer that's pretty easy, an outlier, but let's go through all of them. Monitoring can be an ongoing process. What do you guys think? Think that would be reasonable? Just consistently make sure that the company is up to date on its risk evaluation assessment. That seems reasonable. In fact, there's actually a form of auditing called continuous auditing, continuous monitoring, CACM, which is implemented in that. Monitoring can be conducted as separate evaluation. Yeah, that can be true too. We can integrate it, or we could consider it separately from the other components. Monitoring and other audit work conducted by the internal audit staff can reduce external audit costs. What do we talk about with internal audit? If internal auditor does good work, can that affect the level of work we do as external auditors? Yes, it can. It can actually reduce our work. So we're so far hitting for three. I actually really like it when D is the answer because it makes the walking through all the answers much easier. So the independent auditor can serve as the entity's control environment and continuous monitoring. Does anybody see a problem with that? If I'm the external auditor and I'm serving as part of the control environment and monitoring, if I'm doing work for them, for the client, and then I come in and perform the audit, whose work am I auditing? I'm auditing my work, okay? We've talked about that. How many of y'all would like to grade your own exams? That'd be great, Scott. I got 100 again. I am so good at this. It's like, but you missed this question. So I didn't really mean that answer. Okay. That answer was not the correct answer. I know. I knew that when I wrote it down. Well, why'd you circle that one? It was an oversight. Just no, never do it again. Never do it again. Yeah, we can't trust the auditors to audit their own work. All right. Question 617. Regardless of the assessed level of control risk, an auditor would perform some. All right, let's go ahead and go through the answers. Test of controls to determine the effectiveness of internal controls. So if I set control risk at high and basically say I'm not going to rely on controls at all, is it possible that I would not test controls at all? Yeah, certainly a possibility. Okay, so A is not an answer. Analytical procedures to verify the design of internal controls. Well, first of all, we're not required to perform substantive analytical procedures. Secondly, we would not perform analytical procedures as test of controls. That's not one of the things that we identified as one of those relevant test of controls. We haven't talked about this in much, but we alluded to this. What are the 5 test of controls that we talked about? So inspection records and documents, observation, inquiry, those are the ones that are part of all of them. Then we have one that's almost exclusively a test controls, begins with the letter R. Reperformance, yes. And then we have the one that's a combination of all of those. Walkthroughs, yes, walkthroughs, very good. So analytical procedure is not listed there. So what about C? Substantive procedures to restrict detection risks for significant transaction classes. So do we have to conduct substantive procedures regardless of what we assess control risk at? Yes, we just talked about that a few questions ago. So C is our answer. But dual purpose test to evaluate the risk of monetary misstatement and terminated control risk. We talked about dual purpose test earlier in the semester. That's basically a combined substantive procedures and test of controls. We are not required to conduct joint tests. That's something we can do if a convenience comes up, but it's not a requirement. Question 618, assessing control risk below high involves all the following except what? So let's go ahead and talk about this before we actually go into this, okay? So if we're assessing control risk beyond high, are we saying we believe controls to be effective or ineffective? High control risk would basically say controls suck, okay? Controls suck. We think there's a high risk associated with the controls originally in misstatement. So if control risk is below high, we're saying they're at least somewhat effective, okay? What type of strategy would we be employing if we set control risk below high? Substantive strategy or reliance strategy? Reliance strategy, because we would be relying on entities controls to some degree. Okay, now let's hold that in mind. If we're assessing controls below high, would we identify specific controls to rely on? Yes, we would, because we just are adopting a reliance strategy. Would we conclude the controls are ineffective? We would not. Remember, if we're setting control risk below high, we have to assume the controls are at least somewhat effective. So B is our answer, but let's go through the rest. C, perform test of controls. Control risk below high, we're definitely going to perform test of controls because we're using a reliance strategy. Then finally, D, analyzing the achieved level of control risk out of performing test of controls. So trying to establish what control risk actually is after we test controls, because that's what we're required to do for a reliance strategy. This one's a really good question, by the way. This is a question that if you got the answer right, good. You should feel good about yourself. If you didn't, you might want to investigate why you didn't get it correct and revisit this one. All right. Question 619. Which of the following audit techniques would most likely provide the auditor with the least assurance about the effectiveness of the operation of control? I hate the wording on this question. It's basically saying which is the least reliable test. Now, the simple truth is they've got an answer for this in the book and their explanation is not very good. I would assume that many of you are probably looking at this saying there's 2 possible answers to this, Dr. Barnes, and you're absolutely right. There are, because we're talking about low reliability tests. Inquiry and observation are both that lowest level of reliability. So the book says A is the answer, but I think C is also a possible answer here. So if you answered either one of those, you're correct. And if you circled both saying Dr. Barnes is losing his mind, you're even more correct. You get an extra point on the homework. Actually, no, you don't. No, it's completion based. It's not accuracy based. All right. 621. SOC 1 Type 2 reports issued by the service organization auditor typically do what? So let's go ahead and make sure we remember SOC 1 reports. The SOC 1 reports is the service organization's internal controls over financial reporting. Instead of us as the auditors going to that service organization and auditing, we talk to their auditors and say, hey, can you give us a report about what their controls look like? And they're going to say, sure. Would you like a SOC 1 Type 1 report or a SOC 1 Type 2 report? If I say SOC 1 Type 1, what am I asking for? I am asking for a controls report about the design of internal controls at a point in time. Okay. Is that different from SOC 1 Type 2? Yes. SOC 1 Type 2 says, I'm looking for a report about the design and operating effectiveness about controls over a period of time. All right. I know that's like a lot of vernacular, but it's a really important distinction we have to make. Two really important distinctions. So let's work through this. Okay. Reasonable assurance that financial statements are free from material misstatement. Nope. Okay, it's about controls, not about the financial statements. Ensure the entity will not have any misstatements in areas related to service organization activities. Nope. Ensure the entity is billed correctly. Nope. Assess whether service organization is controlled or suitably designed and operating effectively. We have a winner there. D is our answer. Okay, D is our answer. And again, once you know the nature of controls, this should be a very obvious question. If you looked at this without any knowledge about it, you can say those are all reasonable possible answers. This is the only one that relates to controls, which was, of course, the focus of this chapter. Let's move on to 630, our discussion question. Or is that a problem? It's a discussion question. So Cook CPA has been engaged to audit the financial statements of General Department Stores Incorporated, a continuing audit entity, which is a chain of medium-sized retail stores. Their fiscal year begins on June 30th, 2021, and management has asked Cook to issue the audit report by August 1st, 2021. So they've got a month to do the audit. Cook will not have sufficient time to perform all the necessary field work in July, but will have time to perform most of the field work at an interim date, April 30th, 2021. After the accounts are tested at interim date, Cook will also perform substantive procedures covering the transactions of the final 2 months of the year. This will be necessary to extend Cook's conclusions to the balance sheet date. All right. So let's go ahead and work through these parts, okay, these questions. So a lot of this relates to the audit risk model, but it also relates to some of the things we talked about with interim testing. So the first question is, describe the factors that Cook should consider before applying substantive procedures to General's balance sheet accounts on April 30th, 2021. What dictates the scope of a substantive procedures that an auditor is going to perform over the course of the audit? So just we look at what the previous year did and say, let's do that again. Actually, in the real world, that's the correct answer. But theoretically speaking, okay, what's going to dictate substantive procedures, the scope of substantive procedures? So I'll give you a hint. It's one of the 4 components of the audit risk model. It's either AR, IR, CR, or DR. Which one do you think? It's detection risk, okay? Whatever detection risk is will dictate how we actually assign substantive procedures. We can plan for substantive procedures, but what we actually conduct will depend on detection risk. Now, working backwards, what is detection risk dependent on? It's dependent on risk and material misstatement, okay? Which is a combination of inherent risk and control risk. We can establish inherent risk early on in the audit because we can look at the audit client and say, wow, this audit client's got a lot of inherent risk associated with them. Inherent risk is high. But when we look at control risk, we actually have to test the control risk and controls to make sure we establish what controls are. So would it be logical to say that if we want to establish the scope of substantive procedures, both at an interim date and for the year-end date, we would want to know what control risk is? What's the best way to establish control risk? To test internal controls, okay? So we would like to plan and perform our test of internal controls at an interim date. Now, keep in mind, we have a responsibility as an auditor to make sure those controls are still operating effectively as of year end. But is it possible to perform most of our test of controls at interim? What do we know about controls? Controls start operating and they continue operating the same way over a long period of time. Is that a correct statement? Presumably, yes. Okay, presumably, yes. So if I test controls before April 30th, am I going to assume that they're operating the same way in July? Probably so. So that's going to be the first focus, is making sure we have the results of our test of controls and what we can assess detection risk as. Now, the second part says, for accounts tested at April 30th, 2021, describe how Cook should design the substantive procedures covering the balances at June 30th, 2021, and the transactions for the final 2 months of the year. And the answer to this one is pretty simple. We're talking specifically about substantive procedures. We've already established that most, if not all, of our internal controls testing could occur before the year-end date. Can we conduct some substantive procedures testing before year-end? Is that possible? Is it possible that I could test you on material in this course before we get to the final exam? Yes, and in fact, I do, okay? So it's possible that I could test information on the audit before the year-end date. Is it possible I can test everything that I need to know before the year-end date? So it would be reasonable to say, all right, we're halfway through the semester, folks. I'm going to give you an exam to test you everything in this would you feel comfortable with that statement? If anybody is really wanting to take the final exam right now, raise their hand. Some people are just like, I'm not going to call them out on this. I'm going to say no, okay? What is the likelihood? You get about halfway, you say, this looks pretty familiar. I feel pretty good about this. And then we start talking about testing for specific business processes. And I talk about assurance and attestation engagements. And you're just like, all right, I was not prepared. All right. So yeah, we can test some of the information before year end. We cannot test all of it. So what do we need to do? We need to identify what is it that we can test near year end and separate that out. That's going to be what we test during the interim period. But we need to have some identification of things that we can test at year end. Keep in mind that the financial statements are not even compiled until the period end. So we don't know what the account balances are going to say. So things like confirmations are going to be a little bit suspect because we need to actually establish what those balances are. Some of those confirmations we can't perform year end. Some of those we'll have to wait until year end. But we basically have to separate out some of our testing. The answer to this question is pretty basic. The answer is saying during the interim period, we perform as much testing as we possibly can. And then we realize that we can't perform all of our testing because we don't have all of the necessary information yet. So we're going to wait and test everything remaining during the final or during the year-end period. That's basically all this comes down to. This question sounds really complex, but the answer I'm trying to get you to say is that let's get as much out of the way as we can up front, and then everything else has to wait until year end. All right, now we're going to talk about Rita Crundwell. So Dixon, Illinois. Anybody really looking forward to this case? Because I've been talking about Dixon, Illinois. So Dixon, Illinois is a city in Illinois. It's about 15,000 people, which is roughly the size of Kirksville, okay? Slightly smaller. And if you look at kind of the information here, it says that over 19 and a half years, she got 19 and a half years in prison. I actually think her sentence was commuted by actually, so her sentence was commuted and then eliminated. Basically, she was under house arrest and then was commuted by President Biden before he left office. But she was actually serving home incarceration. Anyway, I talked a little bit about diverting $53 million in city funds. Okay, now think about this. This was over like a 20-something year period. I don't remember exactly when she started. I think it was in 1990, and then she was caught in mid 2000. So about 20-year period. So she diverted $53 million from the city, and it was basically it was one of those things when you talk about fraud. It started out small and it got escalated. Now, there's a lot more going into this and goes into the details of the case and talks a very high level, but she owned her own horse ranch with like 400 horses. Has anybody ever worked on a ranch before or seen a ranch? Okay. How much money do you make from running and operating a ranch, you think, like for show horses? You don't make a lot of money at all. It's actually a big loss leader, okay? People lose lots of money. That's why you only have rich people who have those show horses and have those ranches because they can afford to have them. But everybody's like saying she must be making a lot of money on a ranch. No, what she was doing, she was embezzling funds from her employer. Now, that's all very well and good, but what we're concerned about is some of the information that's in the case. So presumably you read the case and all the things that you go, and I just looked 400 horses, farms, trucks, a $2 million RV, and jewelry. Her business about city treasurer paid out $80,000 at the time of the arrest. That should be probably a big red flag. It's like $80,000. How do you afford a $2 million RV, much less 400 horses? She's just that good. She's just that good at committing fraud. Yeah. All right. So what are some things that we identified during the case? Well, if you look down in the second paragraph, says that so she was appointed as the comptroller treasurer, and then she kind of opened an account in 1990 in the name of Dixon and RSCDA, Reserve Sewer Capital Development Account, for the benefit of the city of Dixon. But she was the only signatory. She was basically the only one who has any financial power in the organization. I'm trying to see where it says. It was in the second paragraph. So as a comptroller, she handled all the finances for the city of Dixon. All right. So that's a really important note. There was not very much oversight. Nobody really knew what she was doing. They just basically said, Rita knows how to do it and she's going to take care of it. So hold on and keep that in mind. She was on the only signatory on the account and the only person who wrote checks from the account. So basically she kind of had a responsibility area there, which we're going to go into more detail about. How was she caught? How was she caught? So she was away from work because she went on traveled for a lot of these horse shows, and one of her fellow employees, she said, "This is weird. This is a bank account I don't recognize." And she went and investigated the bank, and she said, "Oh, this appears to be a bank account that's not part of our books and not part of our records, where there's a significant amount of money." And she went and told the mayor, and the mayor said, "Oh, we need to call the FBI." And then the investigation occurred like over a 6-month period. It was very interesting because they had to continue just doing business as normal while they knew that she was committing fraud and stealing all this money so that the FBI could collect evidence. It's fascinating stuff. Now, some interesting stuff. They found Clifton Larson Allen, the audit firm, liable. So the firm agreed to pay $35.15 million. The Fifth Third Bank agreed to pay. The bank agreed to pay $3.85 million. Now, interestingly enough, she has ended up stealing about 50. I think it said 53 million. 53 million over the course of the fraud. They were actually able to recuperate most of that through asset recovery and through Clifton Larson Allen's payment and the fines to the bank as well, or the payment to the bank as well. The attorney for the city said the mayor also faulted Fifth Third Bank for violating banking standards, the documentation, but basically the Clifton Larson Allen conceded it shared in the responsibility for the fact that the fraud was not detected. Okay. Now, I want to go into the detail about the questions of the case, but I want to point out just how sloppy CLA was in this particular scenario. So I've got a picture here, and I will apologize. It's not as cool as this picture right here. Okay, I know this picture is really sweet, and you guys would rather just look at that picture, but we're going to take a look at something else. Okay, so let's see. Yeah, here it is. So this is actually part of the trial where they showed the invoice that was a legitimate invoice from the Illinois Department of Transportation, and the invoice that Rita Crenwell is falsifying for her payments to herself. Now, I have not zoomed in at all, but can you tell just looking at this scale that there's a difference between the invoices? Should this have been something that the auditor could have looked at the transactions and say, why do these invoices look different? I probably should have investigated this further. Like the letterhead is just completely and totally different. Like she just puts invoice and there's no letterhead up here. That's just like, that's not even really all impressive of fraud. You know, if I was going to commit a fraud, I would actually have the proper letterhead. I would falsify the letterhead if I'm going to commit a fraud. So by the way, if you commit a fraud, falsify the letterhead, guys. Okay. That's the first lesson I'm teaching you. But it gets a little bit more in depth. Okay. So what's one thing you never want to do when you're falsifying documents? You probably do not want to misspell words in the documents. Okay. So if we zoom in on the Illinois Department of Transportation and say location, local section, route section. If we move over here, first of all, different font, location, local section, route, secton. All right. Now, again, that's obviously something we're conceding after the point, but could we say that this was something that was a very obvious red flag that the auditor should have picked up on? Probably so. So let's talk about this at a basic level, okay? Now, we're not assuming now that we know what we know, because obviously, after the fact, it's very easy to detect a fraud. But the question here says, identify the internal control deficiencies that allowed the fraud to occur and continue for such a long period of time, all right? So there is one egregious control oversight. One of my favorite controls to talk about, you should know this by now. If everybody can't say this at the same time, I'll be very you don't have to shout it out, okay? But it's very obvious there's one control deficiency that should have been implemented here and should be implemented if at all possible. What am I talking about? It's 3 letters, okay? CAR, what is that called? Segregation of duties, okay? Segregation of duties. She had the responsibility of custody of assets. She could access the bank accounts at any time. She authorized transactions from those accounts because she was the only signatory, and she recorded the transactions. Have we already established that's an easy way for fraud to occur in that situation? If you're the auditor and you're trying to determine if this account or if the statements are proper for the city, would you walk in and say, okay, there's no segregation of duties, I'm fine with that. She knows what she's doing. This would probably be one of those things the auditor should have said, first of all, yeah, there's got to be a separation of responsibilities. Now, I do want to talk about this because this does come up time and time again. Has anybody ever heard about the frauds that occurred at charitable organizations? Like United Way has had dozens of frauds in their history. What do we know about charitable organizations and their administrative infrastructure? Do they have strong administrative infrastructures, like strong accounting functions? Generally not, because if you're donating to a charity, you don't want all your money to go towards the administration. You want it to go to whatever source you want it to go to. You want to help people, not be paid the people who are trying to administrate that. So what can we say about the administrative function of like a charity, a charitable organization? Is it going to be very robust or very, very minimal? I was leading down a pretty easy path here, and now I'm disappointed that nobody's saying very minimal, Dr. Barnes. We know this. It's very minimal, okay? So segregation duties may not be possible. So let's assume that in this scenario that they did not have the infrastructure to hire people to separate out those responsibilities. Should they have just let it go and just say, well, we can't separate out these responsibilities, so we're just going to have to trust that Rita's not going to steal $53 million from us? What would you do in that scenario if you were Rita's boss and you were just trying to say, I want to make sure she's not ripping us off for millions and millions of dollars? Would you want to actually review her work, have some sort of administrative oversight? Yeah, compensating controls, making sure that I actually review and understand what she's doing and I understand what the transactions look like. Maybe you look at some of the invoices and ask, hey, why does this invoice from the Illinois Department of Transportation look completely different from this invoice from the Illinois Department of Transportation? Doesn't make any sense to me. What about the auditor? Could they have just contacted and maybe done some confirmations on these invoices that looked really, really weird and kind of come up with the fact that some of these are not legit? Probably so. Okay. That's a little bit after the fact. We are still talking about controls here. All right. So lack of oversight, some problems, lack of review. There's also another one that's kind of interesting. So one thing that was found is that Rita Crunwell took a lot of vacation. She took a lot of time off, but she had this process. She had this policy that when she was gone, nobody did any financial work. Does that sound like a little bit suspect to you guys? Yeah. So in many organizations, they have a mandatory vacation policy and they've got a policy. So when somebody else is out, the primary person out holding their responsibilities out, somebody has got responsibility for taking care of that. Why is that the case? Why would that be a good policy to have in place? It's because if somebody's doing something wrong, the second person can come in and say, this doesn't seem right. I should probably figure out what's going on here. That's what happened here, but only after like 20 years of getting fraud. So that was kind of a little bit of an oversight that went a little bit too long after reckoning. One thing that we'll see in a lot of frauds, that's the case you see, is that these people who are committing the frauds, they're afraid to take vacation because they're afraid that their fraud may be unraveled or that it may be caught. So the mandatory vacation policy is one of those. Not to say that's really the case here, because she did take a lot of vacation, but she was very, very explicit in saying, nobody touches the finances until I get back, which is a really weird thing to say if you're trying to make sure the place is operating properly. This is a very interesting case, and like I said, there's a lot of cinema on this. There's actually 2 different documentaries on this entire story, and it's fascinating to look at what's going on with this. So if you're fascinated in this, you might check it out. All right, let's go ahead and do the EWC before we come back to Cost Corporation. So you had to do some working papers here, and I do really like this particular working paper. This kind of exhibits what I think is going to be an example of test of controls that you should understand. So we're going to talk about the process and we're going to talk about the implications of the process as well. So basically what we have here is that we've got a series of voucher packages. All right, 4 of them to be specific. And for each of these voucher packages, you're supposed to be able to go through and check and make sure that certain things exist, okay? Certain things took place. I shouldn't say exist because that implies an assertion. But you're checking control activities for each of these. So the document package should include all documents appropriate for the transaction. So there were 4 documents. There was the purchase requisition, the purchase order, the receiving report, and the vendor invoice. And you're trying to make sure they're all there. You want to make sure that the requisition is signed by a supervisor, purchase order is signed by an authorized merchant agent. The quantities of the vendor invoice agree with the related receiving report, purchase order, invoice is mathematically correct. And all documents in the voucher package have been stamp paid. By the way, I'd like to talk about this one here because we're going to talk a little bit more about this later on. Usually when we have sequential documents like this, where a source document is kind of leaves and changed into another document, we have something called a matching process. And that's basically taking a subsequent document and matching it back to previous documents to make sure there's consistency between the quantities and the amounts on those documents. We're going to talk about 3-way matches and 4-way matches when we get to revenue and purchasing process, but this is an example of that matching process we're talking about. All right, so let's just go through and figure out what our answers are and see what you guys observed. By the way, you will notice that we have assertions. They included authorization as assertion here, ignoring the fact that, let's ignore the fact that it's not a real assertion and assume that this is an assertion that's viable for testing. The simple truth is this is not a real assertion, and the fact that they still include this in the work paper kind of annoys me, but we're going to go ahead and let it be as it is. All right, so our first voucher package was 164210. By the way, you may be asking, is 4 voucher packages all I would test? Technically speaking, no. If you'll notice, there were 71 additional items also included in here. We didn't have 71 vouchers to list out. If you did this in the real world, you'd have a lot more testing going on, but I think 4 was probably sufficient for this assignment. So what do y'all think for the first control activity? Was it effective or not effective? Did we have all the documents in the voucher package? Yes, okay. So 1 is effective. Again, this is just for the first document. So number 2 was signed by the document was signed properly by the supervisor. Is that correct? Yep. Was the purchase order signed by an authorized purchasing agent? Yes. Okay. Was there a proper matching protocol in place? Yes. And then finally, I forget what the last control is. All documents have been stamp paid. Okay. Were all stamp paid? Yes. Okay. So did everybody have effective for the first document here? All right, that was the easy part. Now let's go ahead and get into it. So I'm going to go ahead and start working through this. So 1 is effective. 2, everybody have a deviation here? Yep. So basically we did not have a authorized or supervisor signature. We also did not have a purchasing agent signature, so authorized purchasing agent signature here. And then the next 2 are effective. Now you'll notice as you start aggregating here, that anytime you see a deviation, it gets counting on the number of exceptions here. We're going to talk about the implications of that in a second. But we have the third voucher is effective here, but then did not have a supervisor signature, so we have a deviation here. Then we have this one being effective, this one being effective, this one being effective. All right, so I'd like to talk about this last one. So the last voucher, this one is always a point of contention we talk about. So the question is this an effective or a deviation? Because if you look in the last voucher, if we scroll down, we got the purchase requisition, the purchase order, the receiving report, and then did notice that this is not, this is not an invoice. This is not the vendor invoice, this is an invoice request. So our criteria was that we had to have the 4 documents, but it doesn't appear that we have the 4th document here. Now the question is this a control violation or not? What do you all think? So who is the source of this particular document? Is our client or is it the vendor of the client? It's the vendor. It's the vendors. The vendor's invoice is what's included in here. Because if you notice back in other ones, it actually says, oops, vendor invoice. Okay, it actually names the vendor here and shows that. So you see that all these have the names of the vendors on there. This one is basically not included because the vendor has not yet sent the invoice. Now, we as auditors are trying to make a determination. Is that something that we should hold the client responsible for? What do you all think? Should we say, well, client, you haven't received the vendor invoice. We got to consider that control deviation. As a reasonable auditor, I would say that's not under your control. That's up to the vendor to send the invoice. They included this document in here to kind of fill the void that's listed here. This is not a vendor invoice, but this is about as close as they can get because they don't have the vendor invoice. So this is a matter of judgment. I'm not going to say either one is correct, okay? I would say that this is effective. I would say that they've done their best. But if you kind of said this is not effective because this is not the invoice, I could see your argument here. I'm going to put this down as effective. Ultimately, it doesn't matter because everything else was effective. So if you put a deviation here, it's still going to be okay. But we're going to put this as effective. And I think everything else is effective here too. We have agreement on that.
Wasn't the numbers on?
Oops.
On the invoice request?
Were they?
And, yeah.
So the numbers are different here.
Yeah, that self-total is different from the rest of them.
Interesting.
It said shipping and handling was 1320.
Yeah, so it's the difference is subtotal. So the shipping handling cost is kind of the difference there.
Yeah.
So that's why we got a difference there. So good observations, but yeah. think we're okay with that because we don't have the shipping and handling included in the itemization. Oh, it does have a note here, the shipping and handling is down here, 1320. It's interesting. I've been talking about this now for going on 9 years. This is the first time I've had the discussion of the shipping and handling. Yes.
Could there be something wrong with, receive, which is from.
Oh, up.
Yeah, right there, where. Was that the same number on the 136, was that the same?
Oh, it's an interesting question. So these numbers right here. They look like they're
Yeah,
same.
never mind.
Okay. That's a keen observation. I mean, I like the fact that you all are looking into that so much in depth. Usually this question comes up and this little conversation about whether or not the vendor invoice is correct, and people pick up on that. But the difference is between the reporting. It's very good observations. Optimally, let's just go ahead and we're going to assume this is correct. Okay. So what are the implications here? Controls 1, 4, and 5 have 0 deviations. Okay. 0 deviations. If you're an auditor, how do you feel about that? Feel really darn good. Say the controls are going to be effective. What about the controls 2 and 3? Let's go ahead and go back here. So the maximum number of deviations for any one of these controls is 1, which means the third control is operating effectively according to our criteria. But the second control is not, because it had 2 deviations. Now, we actually asked you to explain what the implications for the audit plan are here. So the question is here, is this going to affect our assessment of control risk, particularly with respect to the assertion that we're testing here? Now, this is an interesting point. Keep in mind that controls are evaluated at the assertion level. And even though authorization is not a real assertion, let's go ahead and pretend that it is for this discussion. What would you say as the auditor here? Would you say, all right, I need to actually increase my control risk for this particular assertion? Or do I think that there may be that may be cause for over alarm? That I may be panicking too much. So let me ask this a different way. Do I have any controls here that address the same assertion? Yes, you'll notice here control 2 and control 3 both address the same assertion. Okay, I'm concerned about authorization of transactions. So even if that second control is not being properly authorized, I've got another control in the same area that's already the transaction not properly authorized. I've got another control in the same area that they're saying that I'm still making sure authorization is proper in this part of the process. So authorization is something I'm concerned about, and even though this control is considered to be ineffective, overall, I think that this particular assertion in this area is valid because we have controls in here that's for a sort of redundant check. Now, it's not to say that I wouldn't adjust my audit plan slightly to address this particular specific assertion or risk right here. But at the assertion level, I think that because we have at least one control that's effective, we can conclude that the controls in general are effective for this particular assertion. Now, the question always comes up, how was I supposed to come up with that with just what I know, Dr. Barnes? The answer is you weren't, okay? That's why we're having this discussion right now. It's important to keep in mind when we consider controls in aggregate, we're trying to consider how do the controls address the risks that we're identifying at the assertion level? The answer here is, I believe the controls are fairly effective with respect to authorization because one of our controls at least is effective. Now, keep in mind, we only have like 5 controls here. In aggregate, if you're doing controls testing, you probably have dozens of controls in a particular area. So you'd evaluate that in the context of all controls and not just like 5 controls. So something to think about. All right, reflecting back, I said I wanted to go back and I wanted to talk about why am I blanking on her name? I want to talk about Susak Deva. I want to talk about, session case. So costs. So everybody remember costs from chapter 4? So yeah, costs was that headphones company, and basically Susak Deva was executive vice president, and over a 7-year period, she sold half of their net income, $34 billion out of $70 million. And we said, boy, that's just gross and disgusting, okay? At the time, we hadn't really talked about controls, but now we do know about controls. We do know about internal controls here. So let's go ahead and get into a little bit more depth about the nature of controls in this particular situation. So first of all, there's a really important point, and I'm gonna have to jump back because I think I'm gonna pause the recording because I don't have the questions up. All right, so discussion. So there's a few questions, and we talk about the limited facts in the 2 cases. Okay, so let's go ahead and we're going to talk very quickly about the questions in the case, and then we're going to talk about these 3 questions here. All right. So the first thing that says, what are some internal controls that are absent within Cost Corporation's internal control system? Now, this one should be obvious by now. We've talked about this control both in AIS, talked about it many times in here. You all know it, you all love it. You're going to get sick of it because we're going to talk about it so much. But what was the easiest one to identify? If you identified 0 other controls, you should have identified this one, and you should always default to this one in every scenario that I talk about it. Segregation of duties. Yeah, segregation of duties. So we know that Michael Koss was an absentee boss. He had 5 financial executive positions. They shouldn't have been in his hands, by the way, because he did not know what he was doing. And he basically said, Sue, do my job for me. So Sue had the ability to perform custody, authorization, recording functions all on her own. Now, it was a pretty big task because she did have an accomplice. She had Julie Mulvaney who was helping her record some of these transactions. So she did have that going on. But there were some other issues about controls that we want to go into. So let's go ahead and talk a little bit about this in this last paragraph. Okay. So we know cost of allegedly daily duties. He had no educational background in experience accounting. Many of the cashier's checks exceeded 5,000, some exceeded 100,000. Does that sound like a control failure to anybody? An authorization of transactions above certain limits? Could we have limits on the transactions that could be paid? Like if there's a check that's over $5,000, it needs to be authorized by a specific individual. Probably so. So that's going to be one of control's failure. Addition, many accounts reconciliations were not prepared, maintained, or reviewed as part of Costa's accounting records. Okay. So we talked about this. Remember back in 302, and I said, remember those bank reconciliations you did? It wasn't just so that you could actually be happy that it balances to the cent. It was because that's a valuable control to make sure that the bank and the bank book balances adequately balance out. We can have reconciliations in other accounts as well. If we're not performing those, there's no controls in those areas. Finally, computerized accounting system is almost 30 years old. Has anybody ever worked on a 30-year-old computerized accounting system? I think it's 2005 when I was in 1995. So now we're going back 30 years. That was the very first time I started actually actively working on computers with a graphical user interface. Like the first computer I worked on back in the mid 1980s, this did not exist. This thing right here. Okay, I'm trying to show it to the camera and I can't get it up here. Okay, we had no mouse, we had no graphical user interface. You had to type in code. Okay, that's how antiquated something like that was. Because keep in mind here, this is not going back to 1995. This is going back to like 1985 because that's when this occurs, or actually early 1980s. So if you've ever dealt with a computer from the early 1980s, you had to type in everything. You had to know exactly what was set up, and it was a nightmare. It was a mess. I would not want to have an infrastructure for a modern computerized system under something 30 years old. So that says what controls should have been implemented and applied to assure proper controls of the company's recorded transactions. Basically, all the controls that we identified that were missing or pretty or deficient probably need to be fixed. Probably the easiest one that we can identify is making sure that they have proper executives in place. Michael Koss can't do the job himself. I would just basically say Michael Koss can't do the job. He has no financial background, so he doesn't really know what's going on. All right, now getting into the questions that were part of this discussion. All right. So based on the limited facts in the 2 cases, assess cost internal control using the COSO integrated framework. Oh, my favorite thing to talk about, controls and the control framework. So at the top, control environment. What would you say about Costa's control environment? Excellent, outstanding. Choose the adjective of your choice. Lax. Okay, that's a pretty good. That was really polite. That's really polite, but lax is a very good one. I would say that their control environment was virtually non-existent. They did not have a very good emphasis on internal controls. The fact that the person at top was basically saying, I don't know what's going on and I don't care, is certainly problematic. All right. Risk assessment. Do we think there was proper risk assessment in this organization? Probably not. What is one hallmark of risk assessment? It's basically saying that we need to identify the risks that are present, and they certainly didn't because the massive fraud was going on. All right. Control activities. Do we think the control activities were proper here? Well, control activities are the design of controls themselves, and some of these controls did not exist. So they did not have proper control activities. What about information and communication? That was pretty good. Koss communicated to Sue that he wanted her to do his job for him. I would say that's probably a good, you see I'm being facetious here. Yeah, information communication is probably missing. Monitoring, there was one big clue that there was not proper monitoring going on in this organization. What is probably the biggest clue that monitoring was a problem in this organization? Keep in mind, monitoring is saying that we update our controls infrastructure and we respond to new and recurring sets as they change and as they evolve over time. What was probably a big clue that they were not evolving over time? Yeah, 30-year-old accounting system. Yeah, can't operate a good address new threats if you can't do that. It's like, although I guess the good news is that you're not going to be a victim to a cyber attack if you can't connect to the internet. So maybe they were just being proactive by being non-proactive. Who knows? All right. Recall from the discussion case 433 that SOX cost is not subject to the required testing of internal controls over internal control of financial reporting as SOX 404. So this is subject to a revenue threshold. At the time, it was $75 million in annual sales. I think currently it's actually $100 million is the threshold for SOX testing. Basically, if you're a publicly traded company, if you have less than $100 million in annual revenues, you do not have to have required testing of internal controls over financial reporting. All right. Despite the lack of test and controls, cost auditors were still required to obtain an understanding of control. What do we say about understanding of internal control? Is that mandatory or is that less than mandatory? Understanding of internal control, 100% mandatory in every scenario, okay? Even if we don't test controls, we do have to obtain an understanding of controls. Do you believe that the auditors were deficient in their duty to obtain an understanding of costs of controls? So do you think the auditors were deficient in their responsibility not to test controls, not to evaluate controls, but to just even basically understand the nature of controls in place? I think there's some strong evidence to say that they didn't even bother looking at the controls at all. They basically ignored controls simply because some of the controls that should have been very obvious and put in place were not existent there. So I think we can make an argument that cost was not just deficient in the fact that they should have been probably testing controls to some degree, but they just didn't even understand anything that's going on. Or I shouldn't say cost. Cost is auditors. Cost is auditors. All right, last question. One of my favorites. The case notes that Susak Deva colluded with Costa's senior accountant, Julie Mulvaney, to conceal her fraud. Everybody catch that? I got to imagine that was kind of like an abusive relationship. I'd have no idea. Julie Mulvaney may have been just as honest as Sue, but I always imagine this if this was put into cinema, that Sue would be kind of like, okay, I messed up. Can you fix it? I promise this will be the last time. And Julie says, oh, it's okay. You did your best. It's all right. I will fix it for the story, but don't do it again. And the next week, Sue was like, I'm so sorry, but I did it again. Okay. And you just kind of like have the wah in the background sound effect. All right. I gotta imagine that's kind of what it's like, but they were working together, okay, to kind of conceal their fraud. Now the question is, would a properly designed system of controls been effective in preventing this collusion? What do you guys think? Like good, properly designed system internal controls, and you heard Dr. Barnes say that internal controls are quite simply the best thing ever. So if we had a good, properly designed system of internal controls, then should have prevented this collusion, right? Everybody's like, I don't know if this is a trap. It definitely is a trap. Okay. What are the limitations of internal controls again? Management override, errors and mistakes, and what's the third one? Collusion. Conclusion. Remember I was talking about John and Napendra tag teaming to cheat on my exam? Yeah. Can my controls bypass that, or can my controls address that? I mean, maybe I could bring in somebody else that could watch both of them simultaneously. You could have multiple people oversight. But in general, when we talk about controls are certainly subject to certain limitations. Things that we cannot design controls to address, assuming that the controls are properly designed. Collusion is one of those. So even though we would like to think that controls would have been very, very helpful in this scenario, this may have been an area that the controls would not have been effective in preventing this from happening. So just food for thought. All right, have a good weekend. See you all on Monday for Chapter 7.